Hello, everyone. It gives me great pleasure to welcome you all to one more episode of the Uncluttered View with Vijay Sambamurthi, which, as you all may know, is our show where we talk to leading eminent personalities from industry and from various fields of industry on the subjects relating to, business, law, economics, and so on in relation to the Indian market. And today, we have as our guest somebody who needs no introduction, but yet it gives me a lot of pleasure to welcome Mr. Ash Lilani, founder and managing partner of Saama Capital, to this episode. Now, Ash and Saama are both, not just well-known names, but they are, legendary names in the Indian VC ecosystem. It would be fair to say that, Ash was one of the pioneers of the Indian venture capital ecosystem, having been doing deals in this market since 2003, and having a huge role to play in the growth of several hugely successful tech startups in India. So he's done a lot to improve the startup ecosystem in his own way, and so therefore it gives me a lot of pride to welcome Ash to this episode. Apart from all that, he's also been a very close friend and a valued client of Lexygen's for more than a dozen years now. So Ash, welcome to our show. Thank you for making time to be here. And with your permission, I'll give you a quick introduction to our audience, to you, and then we can run into the questions. So, Ash, has always had a very stellar career in finance. So as I mentioned, he started his venture capital career in India in 2003, when he was part of Silicon Valley Bank. So prior to becoming a VC, he was at Silicon Valley Bank, a star banker who had a hugely successful, career back in the Valley, and he was trusted by SVB, which, as you all may know, was one of the most, storied banks, technology-focused banks in the Silicon Valley. So at SVB, he was tasked with growing their international business, and that's what originally, brought him to India. Though of course he's Indian, but he's had a very international career to him. But so after all that, sometime in 2003, he donned a new role in SVB of, spearheading their venture capital initiatives. I'll let him talk about all those things in more detail, but that's like the high level. And he is, since then invested in and backed some legendary Indian startups, be it Paytm, which you all know, Snapdeal, Sula Wines, Veeba Foods, Mezzi, Supertails. The list just goes on. He's continued to invest in several successful companies and several on the way. So once again, Ash, welcome to the show, and let's get started. Let's get rolling into the questions.
Yeah. So first of all, thank you for having me on the show. Obviously, it's great that you're doing this because I think there's always learnings we all have had and experiences we all have had that we can share with others. And of course, as you mentioned earlier, Saama and myself value Lexygen significantly because you are part of our ecosystem, you're part of our internal systems.
Indeed.
And we feel very, very comfortable when you're representing us or our portfolio companies.
Thank you.
So thank you for that, and of course your friendship.
Indeed, absolutely. Couldn't have put it better, every word of what you said there. And so that's why when friends get together and talk, the conversations can be much more interesting and insightful. So let me roll with the first question, which is a little bit of a personal question, if you will. Obviously, we know each other well, but for the benefit of our audience, could you tell us a little bit about your early days, your childhood, etc.? Where did you grow up? What sort of upbringing did you have? And how did you enter the big world of finance? And what took you there? Was it like parental pressure, or did you have some personal, attraction to it? Talk us through all your personal early journeys.
Well, I think you alluded to this earlier, but I think I've really been a global citizen, right? I was actually born, a lot of people don't know this, spent my entire childhood in Kenya, in East Africa. I was there through high school, and great childhood. It was a great place to grow up in those days, and still consider that, home in a lot of different ways.
Of course.
After high school, I came to Bangalore for my next level of college education, and actually came to Bangalore and went to college here, did my BCom, and right after my BCom, I moved to Philadelphia to do my MBA.
Okay.
Because I was one of those guys, I knew that if I didn't go for my master's right away, I'd never go back to school. So I wanted to get it out of the
Makes
system.
sense, yeah.
So I went there, and I went to the US in '89, and I graduated with my MBA in '91, which was not a great period
Of course.
for the US economy, and jobs were hard to get. The only job I could get was a banking job. So everything that's happened in my life has been it just happened. I've never planned my life or my career. So I went to work in banking, and after doing 18 months of analyst work, I realized that I need to do something different.
Okay.
And I started researching what I want to do next. And as part of your rotation in the US banks, you finish your analyst rotation, then you get placed in a lending group, which I did. I started investigating that. We were in Philadelphia. We're in the heart of the pharma biotech belt, New Jersey, Pennsylvania. And I was like, we have all these startups. Well, why aren't we working with them? And that's when it dawned on me that banks
And which bank
typically...
was it that you started with?
It's called Meridian Bank.
Sure. Okay.
That banks are very conservative, right? They don't understand this. But I started doing some research, and I came up with this small bank based in Silicon Valley called Silicon Valley Bank that had only one office at that time in Boston and in Silicon Valley. And I said, these guys are doing startups. Why can't we do it? Yeah. So I researched them. I wrote a paper on them. Inter-office mail to our CEO. Okay. He actually opens it, reads it to his credit, calls my manager up and says, who the hell is this kid?
How old were you then?
24, 25.
Unbelievable.
So he got very intrigued. And I said, listen, we have all the startups here. And by the way, I've looked at Silicon Valley Bank's model. This is the safest lending because these companies raise a lot of venture capital.
Right.
They deposit it with us, and we lend them a small fraction of it, right? So he said, this is intriguing. I'll let you do this, but with adult supervision. My manager was asked to supervise this, and he said, go out, hunt for it.
Yeah.
And the beautiful part of that was Silicon Valley Bank's model. You take a lot of deposits, and then you lend. It was, in some ways, we thought it was the safest kind of lending because you always had X number of deposits with you. So anyway, long story short, we started doing this. In 2 years, we were able to go to like tech awards, and 20 out of 24 companies were our portfolio companies.
Wow.
Became famous. But Meridian got acquired by a large bank called Core States Bank.
Of course. Yeah.
Which eventually got acquired by First Union. So it went on and on. But when I went to, when we got acquired by Core States, they were very excited. Oh my God, look at this, all these exciting companies.
Yeah.
But then they peel the onion and they see, oh my God, these companies all don't make money.
Yeah.
What do we do with this? So I very quickly realized that big banks were going to struggle with this. So I actually called a gentleman by the name of Ken Wilcox, who was the CEO of Silicon Valley Bank at that time, and said, listen, I'm getting recruited by other banks like PNC and others to go work for them and start a tech group.
Sure.
But I'm afraid the same thing's going to happen to me in a big bank. So he said, listen, Ash, I've known you. I've followed your career for years. You belong here.
That is incredible.
Yeah.
Yeah.
He says, we're a bank of misfits. People who don't fit in traditional commercial banks fit here. You're one of those. Come work for us. And no kidding, I think 72 hours later, I was an employee
That's
of Silicon
nice.
Valley Bank. Started the first office in Philadelphia. We didn't have an office. It was in the basement of my house. Okay. And I went to IKEA, bought furniture, set up my basement office. And that's how it started.
Wow.
And eventually went on to, run a large part of our practice on the East Coast. And then when the crash happened in 2002, the dot-com crash,
Yeah.
we were also going through management transition. There's a gentleman by the name of Greg Becker who's coming on as the number 2 guy at the bank, being anointed the future successor. And he was asked to build his own team. I remember he called me on New Year's Eve and said, why did he come out to the Valley? And that was it. The rest was history.
Okay. That's quite amazing. So that sounds like a very, very, almost like a dream story, right? A 28, 29-year-old, first of all, writing a mail to the CEO of a bank, no less, because banks are known to be fairly bureaucratic organizations, and getting the attention. So it's absolutely credit to them as well that they took you seriously and trusted you with it. And even more amazing that the CEOs, SVB, had heard of you by then and offered you this opportunity. So, and then with all this going on, as I understand, what many people don't understand is that subsequently once you moved to the Bay Area, you also were tasked with the internationalization of Silicon Valley Bank, etc. And that's kind of what got you focused on Asia, including India and China, which were, of course, eventually the great markets. But when you had all this going for you, it would have been obviously nice to have been a very up and rising, jet-setting executive of a top bank like SVB, and being trusted with putting up a whole new globalization move. When you had all this going for you, why did you shift to venture capital, which was not something you had done before? And I just wanted to understand the why and equally the how. I mean, how did you make that shift and convince internally that venture capital should be led by you?
As I told you earlier, I never planned my career, right? Things just happened to me and I just followed my own gut. So if you go back to it, right? So when I went to Silicon Valley in 2002, things were at its worst ever in the Valley, right? Companies like Webvan and had
Which
all
had
gone out of
collapsed,
business, everything had gone. And I was responsible for 80% of the portfolio in Silicon Valley. Now, when things are great, everybody's happy. No one pays attention. But when things are tough, suddenly everybody wants to work with you, right? We were the bank first in line, but we had a very strong philosophy of working with our venture capital friends to save as many companies as we could. Okay. And that's where I built my deepest relationships in the Valley. So in some ways, I was fortunate I went at a bad time. And then when I started looking at it, we started looking and saying, why is the Valley in such bad shape? What could be done different? And the biggest issue was cost of product development in Silicon Valley at that time was incredibly high. So I had a thesis that eventually product development would shift to India and China for cost reasons, right? And eventually these were going to be huge markets because of the populations of the countries. And if there's money to be made, venture capital will follow. Sure. That was the basic thesis, right?
And this was right after the dot-com bubble burst?
So 2003, I would say, sat down with at that time who was a COO and then became CEO, a guy called Greg Becker.
Sure.
Greg and I sat down and we were just literally whiteboarding, which today in the days of work from home, this would not have happened. So I look back and say, that was one advantage of not working from home.
Yeah.
We're just whiteboarding in my office one after, like, what could we do? What could we do? And I said, Greg, wouldn't it be great? We always follow the VCs into deals. Wouldn't it be great if the VCs followed us somewhere doing something? They don't understand India and China.
Yep.
Why don't we figure it out? So I started making trips to India and China and Israel and the UK. Those are the 4 markets we picked.
Okay.
And my entire career has been the cusp of technology and venture capital, if you think about it, right?
Sure.
So I knew both well. Like I knew enough of venture capital to be dangerous.
Yeah.
Okay. And I understood enough of tech startups to be dangerous.
I love how you put it.
Yeah.
Enough to be dangerous.
Sometimes, but the biggest issue is, a lot of people also talk about, can debt guys do equity investing and equity investors do debt? Because they're very different mindsets, right? Indeed. Lenders have a different mindset from an equity investor. Risk profile is different, risk reward is different. So anyway, so Greg and I studying, and so I did this for another year, came to India at that time, built relationships. I'm not kidding you, Vijay. At that time, if I had to gather all tech-focused VCs and entrepreneurs, I'd have 30 people in a room.
Okay.
Today, you know how many people you could fill, right?
That's crazy.
So build those relationships, and then I said, you know what?
This is in India, you mean?
Yeah, in India, I did the same thing in China, Israel, and the UK.
Similar, same story.
Same
Even
story.
in Israel.
Even in Israel.
Okay.
But the benefit we had was Silicon Valley Bank was a name to be reckoned with, right? There was credibility. I had credibility in the Valley. Yeah. So we decided, let's show the VCs what we have learned. So in 2003, we went up and down Silicon Valley, Sand Hill Road, and said, listen, we want to take you to India for a week. We want to show you the good, the bad, the ugly. Because you need to see it, because your portfolio companies need to lower their costs. They need to outsource product development.
Correct.
And I didn't mention investing, because if I said investing, they'd all get scared. Yeah. Nobody wanted to invest in India, right? Correct. But I said, if you come with me, you have to send a decision maker in the firm, either the founder of the fund or a senior managing director, right?
Yeah.
So that's what we did. We had 23 venture firms
Wow.
join us, from everybody from Sequoia to NEA to Bessemer to Battery to Canaan to Lightspeed. Everybody joined us.
Sure.
We came out here for a week. And again, I remember this is 2003. So very different mindset. So for example, we got an entire afternoon with Mukesh Ambani and his team. They
Sure.
just built Reliance Telecom in New Bombay. We got an entire half day with Narayan Murthy and his team at Infosys.
Wow.
So we brought together and we showed them, as I said, the good, the bad, the ugly.
And the names that you mentioned are all, I mean, ironically, about 5 of those names are Lexygen clients.
Okay, it's
and,
good.
And you know, they've all done their storied bits in the ecosystem, in the valley for sure, and some of them here as well. So I'm not surprised that you got that kind of time. But
Yeah.
the key thing is that you were able to bring them all.
So we came here. It was a great trip. At the end of the trip, 19 out of the 23 firms that we brought came to us and said, listen, we get your point. We need to look at India, okay? But we don't know how to.
Sure.
We have people of Indian origin in our firm, but they have never worked in India. They did IIT, they went to the US, whatever, but
Yeah.
they've never worked in India. They don't understand India. India is a complex country, right? So again, being opportunistic. This is not something a bank normally does, but we were just very opportunistic. Said, guess what? We'll help you. We started a consulting company, hired my first 2-3 people,
Okay.
and said, we'll be your eyes and ears. We'll be an extension of you on the ground, and do everything you want to do. And what was that at that point? Helping their portfolio companies, coming to India, finding partners, finding employees, finding, outsourced developers.
Sure.
So we became their extension of them. But then typical venture capital, right? They start sending us companies.
Yes.
One company comes, 2 company comes. Then the partner says, I might as well go check in on India and how these companies are doing.
Yes.
They come here, and obviously the next question is, do you have any companies we can look at for investing? Now we're talking about 2005.
Yeah.
Okay.
Correct.
Now by this time we had opened India, we had opened the UK office, and we were about to open Shanghai. Israel was never going to be a bank; it was just going to be a standalone office. That was also open. So 2005, I went back to Ken and Greg at the bank and said, listen, guys, we have a great opportunity.
Sure.
The Indian ecosystem, we know. We have brought everybody here.
Right.
Eventually, this is going to outgrow us.
Yeah.
Okay? The deal we made with the VCs when they became the consultants for them was a 3-year deal. Within 3 years, I knew either they would stay and like it
Okay.
or they'd leave. Right? Which is exactly what happened. Those who left. Those who stayed and out.
Absolutely.
Large
Are
funds.
still around. Are still around.
So that was the start of it. And I went to Greg and Ken and said, I think we need to start a venture fund in India. But not a typical co-investment fund like we have in the US. A fund in India that is managed by me and my team.
Yeah.
You guys contribute capital, lend us your name to start with. We'll become independent going forward.
Sure.
We'll invest in seed and early stage. We'll only raise never more than 100 million,
Indeed.
right?
Yeah.
And we'll cherry pick the deals we want to, because we already know the partners, and we'll work with all our friends who we have brought here.
Sure.
That was the genesis. So the bank helped
So
us
they
out.
became the bank became your anchor investor, so to speak.
First anchor investor,
Understood.
and then we went out and they put 15% of the capital. We went out and raised 85% of the capital. And again, most of those LPs are still with us today.
Okay.
And that was the start. In 2006, we launched the fund. And fortunately, within a couple of years, we had found these great companies, including this young visionary entrepreneur called Vijay Sambamurthi, and
indeed.
we were off to the races.
To speak of that young entrepreneur called Vijay Sambamurthi, I think you also not just backed him, but you also backed him through some pivots. And I would say arguably about Snapdeal, the same thing, right? They didn't originally start as a e-commerce business, which they eventually ended up pivoting to. So why I'm drawing these parallels is there is a parallel between your own journey here, where you went through this banking journey with SBB, and then pivoted to the consulting model because it's not easy to get a banking license in those days anyway, regulatory perspective in India. So you pivoted to that kind of a model and made it work, and then eventually pivoted to investing yourself. And so would it be fair to say that you had more patience with entrepreneurs and their pivots and more understanding and empathy with that? So walk us through your philosophy around some of these, how you treat your founders when they come and tell you something fundamental like we're going to change our business.
Yeah. Actually, I have a very different philosophy on this. First of all, listen, I'll be honest with you. People say this all the time, but I really believe in it. I back people 1st and foremost. I mean, if you can talk to all the entrepreneurs I've known, you'd go to call Viraj at Veeba or Kunal at Snapdeal or Rajiv at Sula. We back people, right? Because sometimes we come in so early that there's really no basis. You're really betting on the founder and betting on how big the company can become, right? So as I look at what happened, I think so our philosophy is, how do you treat your founders? First of all, I think for us the key is this founder passionate?
Sure.
Do they have vision? Do they understand the domain? But for me, the biggest test is what you just said, is if things don't work out, is this founder going to be open to pivoting? Or are they going to be stubborn about their idea? Yeah. So in my due diligence phase, when I spend a lot of one-on-one time with founders before I actually pull the checkbook out, this is one thing I try to assess. I'll give you a simple example. So we have a company in our portfolio we had called Mezi,
Sure.
which we sold to American Express.
Yes.
So when I met them, Mezi was introduced to me by somebody in our network, and all he called me and said was, Ash, these are your kind of entrepreneurs. You have to meet them. So I went to meet them. I liked them, and we moved forward. But the one thing I asked them, at that time they were a B2C company. And I said, listen, this is great. They were the first chatbot ever. Okay, before chatbots were called chatbots.
Sure.
So I said, this is going to take a lot of capital over time. And what if we realize that the cost of doing what we're doing is going to be so high that you guys are going to get diluted? Will you be open to reconsidering the model at some point? It was a very hypothetical question.
Sure.
And they were like, listen, if our current model doesn't make sense, we will work with you, you guide us, we'll figure out a pivot and we'll do something different. Absolutely. They were not stubborn about that idea.
That's a green flag straight away.
But there are entrepreneurs who say, you know what, you don't know what you're doing. I know my domain, this is what I'm going to do, and I'm never going to change it, and I'm going to be stubborn about it. That is a red flag for me, and I pass. So, but the best companies that I have invested in are companies that have pivoted.
Sure.
197 to Paytm, Snapdeal from Groupon model to e-commerce to marketplace. Again, another one. Mezi, I just gave an example of, right? So that just shows you the entrepreneur is things bigger than just narrow, right? Yeah. They have a wider sense of what the vision is. Vijay told me when it was at 197, we're going to be $1 billion company. Sure. Now, of course, he's way surpassed that. But to have the confidence where you're not even valued at 20 million.
When not a single company in India was valued at $1 billion.
Exactly. Yeah. But that vision was there, right? And so you back people like that. So I think that's really it is. You want people, a little chutzpah, as I would say.
Absolutely. No, that makes a lot of sense. And I think, you've got to work with, I agree, that founders who are a wavelength match with your philosophy, right? That's very important. And founders who are not just looking at money, but looking at guidance from you and are willing to listen. Wonderful. So now I'm going to, there's obviously a lot of successes you've had through the 20 odd years that you all have been investing in India. But the nature of the beast of venture capital is that you may have had a lot of successes, but you also have had some not so great outcomes.
Correct.
But I'm not going to focus on instances of which outcomes didn't work well, but I'm going to focus more on the principle and the issue that needs to be addressed. So this question I'm going to pose is more about when you look at founders, what are some of the messages that you have? I'm sure you're asked this question a lot in industry forums and conferences and stuff. So, but I'm going to still ask you this question, but in a more focused way. So, how do you ensure that, for example, your founders, some of the common problems that I have seen, and I'm sure you've seen much more than I have, but I have seen as well is that initially they have a certain level of passion in their business, and obviously some of them see it through and take it to well past. If you wanted to build a unicorn, but that unicorn is way past now, that it's an irrelevant milestone. So many people are like that who continue with that. Some people lose steam. That's one problem. Second problem is that some people start maybe congratulating themselves too soon. So in situations like this, how do you think you as a VC investor step in and ensure that the companies stay focused on what they're supposed to be doing and focus on what they do best, which is to keep growing the business in the right way.
So there are two things I'll talk about. One is just general industry, and then I want to talk is our approach
Of course.
at Saama.
Yeah.
General industry wide, I think one of the biggest misconceptions founders have is that raising money is a sign of success.
Of course.
To me, that's just the beginning, right?
Indeed.
The sign of success is when you build a large company, you're able to return value to your stakeholders. That is not just your investors, but your employees, your
Everybody.
team members, your management, yourself, your family, right? People so mistake this. So, this big announcements, we raised this much money. To me, that's unnecessary. I think what you focus on is what the business is doing. How is the business growing? How is it scaling, right?
Yeah.
So we made valuation as a benchmark of success.
Yeah.
We made funding a benchmark of success, which is not really true. But for us, the philosophy is very different. One of the things I take pains at, and I think enough of my portfolio companies to attest to this, my first focus is building trust with the founder. I want to build trust with them where they feel comfortable enough to call me at midnight with good news or bad news.
Absolutely.
Whether it's a personal crisis or a professional crisis, right? I don't want to be managed. And sometimes I think founders spend so much time, how do I manage my investors? How do I tell them what they want to hear? And this is where the mistakes happen. This is where the governance lapses happen, right? So to me, the main focus I've taken is first and foremost, build trust among your founders that they feel comfortable. Even when there's bad news, to know, okay, you're not going to panic. You're going to sit there with them and work through it, right?
Yeah.
And listen, it always costs more, always takes longer.
Yeah.
Okay? And you want a partner who will work with you through all of that.
Right.
And I think sometimes the mistakes founders make is they focus on just taking money without realizing, is this smart money or no? So listen, coming from the Valley, I'll tell you, they're smart angels.
Sure.
Okay, who build businesses, operate business, who actually add value to you as an angel.
Yeah.
They guide you, they help you. When you have a problem, you can go to them. But then there are angels who you are being invested in because you'll be talked about at a cocktail party.
Yeah.
And Vijay, don't get me wrong, today you can throw a rock in Gurgaon or Bangalore, you hit an angel. Okay, there's a lot of money.
I understand what you mean. Yeah.
So what I'm saying is to take money, whether it's institutional or angel, take the right people. If you're going to take angels, take people who operated businesses, who understand your domain, who can open doors for you, right? And take institutions who are known for being patient, who are known for working with you, who understand your space.
Of course.
The other thing is, think about consumer investing is different from tech investing. Cycles are different. Patience levels are different.
Of course.
Right? So we have to focus on that. But I think for me, the biggest thing is you have to spend time upfront with the entrepreneur, right? And you're right. People can get carried away. Things happen sometimes. The companies struggle for different reasons. For me, I don't have an issue with it as long as the founders have done everything they can within their power.
Of course.
To survive, to scale, to pivot, to change. But sometimes things happen. For example, ChatGPT came and overnight destroyed business models of one of our companies.
Okay.
It's not the founder's fault.
Yeah.
Even they didn't see it coming, we didn't see it coming, right? So even though we're winding that company down today, we don't hold the founders responsible.
Understood.
But then we have other
That's a game-changing event.
It is. So that's okay. Companies, market changes, things happen. But then there are situations where egos come in, co-founders have dysfunction, they all try to harm each other, that kind of stuff is what I have a problem with. Sure. But you can never truly assess. People's colors change. But the more time you spend upfront building a relationship with the founders, understanding who they are, where they grew up, how they grew up, who their families are, what their value system is, I think that is as important as the financial metrics of the company.
Understood. No, that makes total sense. And I think you made some very, very insightful points there, because I think founders very often raise money from people who they can't manage because they want money and they're just trying to close. It may not seem like a big issue because they are not bad people, they are reputable people. But it's not about good or bad, but it's about who's more suitable for your cap table and your journey, and who's more likely to help you. So I'm very happy to hear.
Can I give an example of that?
Sure, please.
So I think he's also a client of yours. Talk about Viraj Bell at Veeba.
Of course.
Okay, Viraj has built an incredible company.
Incredible,
right?
yeah.
And I've known Viraj in his previous avatar at Fun Foods, which was a company his family had started and they sold.
Yeah.
But Viraj, I've known him for a long, long time. The most thoughtful entrepreneurs I've ever met in my life.
Right.
Now think about it. He has never chased valuation. In fact, if you know very well,
Yep.
as you're his legal counsel, that his same 3 investors have been there throughout his entire journey,
Yep.
right? That's because he is not focused on valuation. He's focused on who are my right investors? Who's going to help me?
Indeed.
Who's going to do this for me? And not being afraid to say no. I will pick the right investors despite having so much demand. So I think that kind of attitude to say, I want to do what's right for my company. I don't want to do what's right for the press. I don't want to do what's right for media or for the ecosystem. I'm doing what's right for my company and my stakeholders. If you look at his journey, right, you have gone through great times, tough times, survived the pandemic.
Right.
And today you built a significantly important player in the FMCG ecosystem.
Right.
But not once have you ever heard Viraj talk about his valuation,
Yes.
about the amount of money he's raised.
Indeed.
Never.
And also, it's other people who talk, right? And obviously, Viraj is a client, but he's also, like you, a dear friend. So that's one thing which I'm not told him, but I think it's a good attribute that he has is he doesn't focus too much on spreading the message. He's focused on building the business the right way. So thanks for that example. Now, let me ask you a slightly different question, which I'm asking this because obviously, no matter how much time I spend with you, I'm a transactional lawyer. I'm never going to give up that hat, right? So my question around this is, what is your view of how the regulatory framework in India has evolved? This is not a political question. This is not about which government did, that's not of interest. It's about objectively looking at the journey India has made and, what are some of the good things that have improved, say, since 2003 when you started investing to now. It's been 20 years. And obviously some things have been subpar, some things have been terrible. So, what would you like to see in terms of regulatory or legal changes that you think can help Indian founders think big and grow, and also give more comfort? If you see today India, while some of the names that you mentioned are here, even today, I can think of 20 names from the Valley, which are top funds, which are still not investing in Indian companies. Even a Y Combinator still says that you have to be there as a US company to be eligible to be in their cohort, even today, after all the credibility, after all the exits, etc. So clearly some things are being done right, but some things are not being done right. So how can we what can the Indian government and the Indian legal system do to give more comfort to the international investor community to invest in India?
We talk about the ease of doing business in India, right? But I think we can't just talk the talk, we have to walk the walk.
Of course.
Okay? Yeah. Listen, we've come a long way. I would say over the past 10 years, we have evolved significantly as a country that supports startups.
Yeah.
We have come a long, long way, but we still have a long way to go. So we're going the right direction. We've made a lot of progress, but we have a while to go, right? I think we are fortunate to have a prime minister who actually understands startups. When you talk to him,
Absolutely.
he understands the lingo. When he talks AI, deep tech, he understands. It's not just using buzzwords, right? The question is, how does that message cascade under him, right? All the way down to the people actually executing, right? And there's certain things that are frustrating for us as investors and certain things that are frustrating for companies. And I'll give you a couple of examples where I think we could do better. Okay. One is any venture fund you talk to today, any company you talk to today, lack of consistency in tax implementation is an issue.
Okay. Absolutely, yeah. I agree.
We have to understand venture funds invest, they exit, they pay tax, they send money back to LPs.
Okay.
We can't question these things 7, 10, 15 years later,
Indeed.
right? So we have to have some consistency in how we implement. I have no problem paying tax, but let's have consistent rules.
I agree.
Okay, so that we know what is expected of us. So I actually loved it when, Mauritius is going away, now you pay 10% tax and you're done.
Yes.
I'm very happy paying that all day
Except
long.
it's not 10% because it can change in the next budget.
Yeah.
So I understand what he's talking about.
So you get what I mean, right? So consistency is what I'd like to see.
Yeah.
The second thing is our companies have so much of a compliance burden. Now, I invest in very early stage companies.
Sure.
These companies don't have the resources to keep up with all this compliance, the amount of filings, if they can simplify this, and we talk about doing it,
course.
but we have to implement it. And then the third thing is, listen, as we mentioned earlier, sometimes companies, things don't work out for the reasons beyond anything else. Like,
Yes.
you're winding down a company, and trust me, trying to wind down a company here is sometimes a 6-month, year-long process.
Even longer.
Yeah. And
You're being generous. Yeah. Sometimes even longer.
exactly. And these are good people, good companies. Wouldn't you rather have an easier process to wind it down so the founders can go start something new and continue growing and contributing to our ecosystem?
Sure.
The investors can move on, but the amount of time that gets spent in all this stuff is an issue. So these are 3 or 4 things. I mean, there are others, but as I said, we've come a long way, but we have a little more to go. But the key is the message has to cascade all the way down to the bureaucracy that implements this.
Absolutely. But I will also make one additional point that, which is again, I'll say there is a part good, part bad, which is the one thing that I have seen lately in India, which used to be a major pain point earlier, is there used to be this attitude of legal compliance is the last priority, documentation is the last priority, because they always thought kuch nahi hone wala hai. But the compliance crackdown on bad conduct has been tremendously improved. That's a good part. But the bad part that almost inevitably follows is that some parts of the regulatory bureaucratic framework start using that to also harass some of the good ones. So what ends up happening is there is absolutely the bad players need to be weeded out. I mean, there is no doubt in my mind that the government has to be ruthless in weeding them out, because the bad players always taint the ecosystem. So they need to be dealt with very harshly and quickly. But you cannot have a system or a law which implements that by saying that everybody is treated as bad till you prove it.
Yeah.
So it should be the other way around. So I think that's another area which, as a lawyer, I think our government could improve in terms of doing business, ease of doing. This is not just about foreigners coming in. This is about our own entrepreneurs, right? They need to feel that they have a welcome environment in which they can operate without trust, as long as they are, following the rules, as long as they've got their licenses, as long as they're paying their taxes. They should be able to operate and grow the business in a nice. So yeah, thanks for
innocent.
please, yeah.
You have to be innocent till proven guilty, and once you're proven guilty, yes, the bar should come down on you significantly hard, right? But also think about the more companies we encourage, the more companies we support and make it easier for them, the more successful they are, they will contribute to the economy.
Of course.
They create employment, they pay taxes.
Absolutely.
Right? That's a good
Some
thing.
of them are so huge, such huge employers now, including some of them who are listed, like Zomato, Paytm, etc., and Swiggy. All those companies are now listed companies, right? I mean, and even before they were listed companies, they were employing so many.
And also, one thing, don't forget, all these companies have created wealth creation in a way that didn't exist for employees before, right?
Absolutely.
Now, the good part is that these employees are now reinvesting back into other startups,
Indeed.
which further spurs the economy, right? So you have to create this recycling economy that works well.
Absolutely. And that's, I couldn't agree more. And part of that, though that's a debate for another day, is also that they should help Indian companies grow and become global. There are it's not that there is no ability to do it, but it tends to be a little restrictive. People have to think through 1,000 things before they have to do those things. Globalization thoughts. So I think Indian companies should be able to go global with as much ease as an American company. And that's when we will truly become great as an economy.
I agree.
Yeah. So now I'm going to ask you a slightly interesting question. Sorry to kind of jump this on you, but I'm sure you know about Bessemer Venture Partners anti-portfolio.
Yes, very well.
But for the benefit of our audience who may not be familiar with what an anti-portfolio is, it's basically, Bessemer, which is one of the leading venture firms from the US, they have listed on their website not just their portfolio companies, but they have something called an anti-portfolio, which are their misses. Those are companies that they talked to but didn't invest in, and which went on to become huge hits. And they have funny stories with some of them. So the funniest one I like is how how when they turned down Google, the the lady who was renting out the garage to the Google founders wanted the Bessemer partner to meet with him, and he said, "Can you show me the shortest way to the car where I don't where I don't go past your garage?" He didn't want to meet them. He didn't even want to take a meeting, and they went on to become huge. So I'm sure every venture fund has some companies that they wish they hadn't missed. So what's your story? I mean, do you have any such that you would like to share with?
So, Vijay, interesting question. I think I always tell my team the best deals we've invested in are the ones we didn't invest in because we had a reason not to invest, right?
Of course.
And we can't live a life of regrets. But looking back, there are a couple of companies, given that I'm so focused on consumer, that I wish we had looked at differently than I did. Okay? And that onus is on me. So I passed on both of them for similar reasons. The first one was Licious,
Okay.
which obviously has gone to be a very successful company.
Indeed.
And the other was ID Foods.
Of course, even bigger.
Both companies that I'm actually a consumer of. But the reason I passed on them at that point in time, the thesis, which today is invalid, was these are both perishable products, right? The supply chains are different,
Okay.
right? How are they going to tackle going to different cities? They can't just keep scaling in Bangalore. They have to go to different cities. How will they scale with a... And at that time, if you remember, we had issues with supply chain, logistics, cold chain. And the call I made was it's not worth the risk for us. But to their credit, both of them proved me wrong. And I'm very happy for them. And the way they did it was they figured out the supply chain. In fact, they proved it out so well that I backed a couple of guys from Licious to start Supertails.
Yes.
Right? So
I know.
the story goes
Absolutely,
on.
Yes.
And they were the ones handling supply chain and logistics. And ID Foods figured it out where they said, no, what we're going to do is we're going to create localized models of production for our product in each city to be able to deliver this. So I would say those two I would look at as for as anti-portfolio, because if I do it all over again, I would have done those two deals because I like the product, I like the market size, I like the founders. But sometimes...
Okay. Given how well Supertails is doing now, maybe you should look out for people who are moving out from ID Fresh to start out, right? Your next...
Yeah.
Yeah. But I understand. I completely agree with the rationale there. It's hard to make these calls. And I also think sometimes it's hard to do every deal, right, for you. Yeah. I mean, there are so many good companies out there which are seemingly good. Those must be really challenging to...
But it is. But sometimes you get hooked on a sector. Like, for example, I spent 7 years looking at the pet sector, right? And it really looked very, very hard.
Okay.
And we must have looked at about 40 deals because I believe in that model. I looked at Chewy in the US.
Sure.
And I believe that India was evolving and changing. And that people were moving from becoming pet owners to pet parents. But 7 years ago, people laughed at me. Like, why would you invest in a pet company?
Correct.
But we didn't meet the right team. That was the biggest issue. And then when finally we met the Supertails team, we were like, it clicked.
Yeah.
And we backed it. And I think now that sector is growing fast and there's so much interest in that sector overall.
Basically, the stars needed to align.
That's it. It's timing. It's all timing. Yeah.
Makes sense. And absolutely right, because there are some, pet products startups in India which got off the blocks a little too soon, in my view. So they probably had, everybody talks about the first mover advantage. Those guys probably suffered from the first mover disadvantage because they established the problems to be fixed in the sector, and others followed and did a great job.
Okay.
So that's wonderful. The question I'm going to ask you is slightly more broader India-based question. Now, India, there's a lot of metrics being thrown around. The one that is more finite to me and more easily defined is to say that we will grow our GDP to $10 trillion by 2032, right? So, that's certainly not the only way to measure our success, but that's one of the metrics to use, at least the economic part of it. And we are at about 4 trillion right now, projected 4.2 by the end of the year, which I read somewhere. So my question to you is, obviously everybody has their take on what India needs to do to get there. And it's a little bit like, the 6 blind men touching an elephant. Each person thinks that it looks and feels different from what they need to do. Now, from your VC hat, what do you think is the role that startups are going to play, in this 6 trillion of GDP to be built in the next 5 to 6 years, or say 7 to 8 years? And what is the role of venture capital? And obviously, the simple way to answer that question is to say they're important. But if you could just walk us through a little more granular detail as to what you see are some of the growth engines in the startup world. And as a VC, do you see Saama and other VCs focusing on some of the sectors and where we need to improve investment in? So just walk us through all of that.
I think the target is a realistic one. It's definitely achievable, but there'll be a combination of many things, right? Sure. I think obviously the industry titans of today will continue expanding, growing. The consumer sector has already proven that India has got a lot of disposable income. People want better products at better prices, and the scalability is there. And they'll continue to grow, and there'll be new sectors that are defined.
Sure.
I think also the other change will come is that a lot of things that we need to create, like for example, all the challenger brands that have been created over the recent years, there'll be more to come. There'll be more categories to come. Okay. Even things, we take basic things like food and beverages, they'll also evolve. But I think that's a small piece of it. I think the bigger opportunity is things like India for India. I think that's something we have not really done well so far. And I think we have a huge
India for India.
India for India, whether it's manufacturing, whether it's tech, we've always been defaulting to buying imported stuff, whether even it's technology, right? You said you never go wrong by buying IBM, right?
Sure.
Now we just say never go wrong by buying something local.
Indeed.
So large industries in India have to start buying local, tech, software, hardware, whatever we need. India for India manufacturing, right? For example, we've for so long been so dependent on China. And now with everything going on in China, the issues globally for China, I think it's a huge opportunity.
Of course.
And we have a portfolio company right now called AutoNext, for example. They're making EV tractors in
Indeed.
India.
Very
right?
fascinating.
EV autonomous tractors for India. India for India again.
Yeah.
Things like that. So I think there'll be more manufacturing opportunities, more technology-driven manufacturing. I think defense is coming to be. In fact, today I think you saw an announcement of a large defense-led deal. Yeah. Space is becoming a big investment area. And I think, so deep tech is real, okay? But I think it just can't be purely deep tech and AI. That's one segment. I think we have to look at it as all buckets cumulative will take us to that number that you just said, right?
Okay.
So it's consumer products, it's consumer tech, fintech, and then of course all these new sectors: India for India manufacturing, EV, space, defense. I think all this combined can take us there. So we can't just say one is better than the other. They all make sense. Yeah.
Of course. Do you see AI as, obviously AI as a sector in itself, deep tech, AI-focused hardcore deep tech companies are going to grow because it's still a growing sector. There's lots to be done. Despite the global growth, there haven't been corresponding similar amount of growth. I mean, yes, there are lots of AI startups getting funded, but if we compare it to what's going on in the valley, it's a blip. Right? So what is your message for Indian AI founders in particular? Why am I singling them out for attention? Not because they are special, but because they have an opportunity where they are lagging behind today. And the AI developmental costs, every time I talk to people in the valley, everyone's moaning about how expensive AI talent has become. So can there be opportunities for us to do some serious disruption, like your outsourcing boom of back then? Are there going to be AI services for which India could be a logical candidate in your view? And what about also development itself? Because historically, conventional, traditional software, we were never product guys. We were only going after the services babe. Can we also leapfrog that this time? Because AI, by the kind of beast that it is, does offer a lot of chance for smaller players and less developed markets like India to be disruptors. So I'd love to get your thoughts on that.
See, to be honest with you, even in the valley, AI is not fully understood.
Okay.
Everybody talks about it. Everybody is the buzzword. There's so many companies, so much money has put into it.
Yeah.
But if you look at monetization, not many people have been to monetize it, right? And the big boys are playing very aggressive and hard in it, right? They want to control everything.
Yes.
I think we are seeing a lot of AI-led deals here, but I look at them, a lot of them, and see they're more features than products.
Okay. Yeah, I
And
agree.
we need to focus on prioritization,
Absolutely.
right? So the two things. One is prioritization and one is the ability to go to market,
Yeah.
right? And still at the end of the day, the larger revenue base will be outside of India.
Yeah.
So the whole go-to-market situation that SaaS companies face, others face, AI companies will have to face.
All right.
But in terms of being able to create disruption, I think our talent today is way better than we had 10 years ago.
I agree.
But we need more. AI is one where we need to really, I think, focus on the education system to create people,
Sure.
create talent. Why do you think AI is booming in the Valley, right? You have Stanford there, you have Berkeley there. The mindset is very different.
Of course.
So we need to do that here. But it's coming. It's coming fast. It's happening. But I think my biggest question is when my team brings me these companies, A, what's the differentiation? What's the scale? Who eats them up?
Of course.
Right?
Yeah.
And we really need to look at that because it's moving so fast that even 6 months, somebody can just overtake you. You won't even see it coming.
Yes.
And of course, you have companies like Perplexity and others out there,
Who are
you know,
changing the game every day.
changing the game every day. But even they
Yeah.
have to constantly evolve on a daily basis to keep up with this. So I think our focus should be really on figuring how we can use AI to create domain-specific products.
Yeah.
So if you're going after, say, legal, figure out what are AI-driven agentics you can create to make that whole process efficient, right? We recently saw a deal on patents.
Okay.
Can make patent
Patent
searching
filing.
easier for law firms.
Okay.
We're seeing that in collections. We're seeing one of our companies, Zenny, use that for accounting
Yeah.
for startups.
So this is an Indian startup.
Yeah.
Okay. Love
So
it.
I think we have to see more of them, but I think domain specific, don't try to go out compete with the big boys. The capital required for that is
It's way too high.
way too
I
weak.
agree.
And they're trying to compete with Microsoft, Google,
Yeah.
OpenAI, right? You can't do that. But
agree.
focus on things and listen. And it's not a bad thing to get acquired,
Yeah.
right?
Yeah.
I'm happy building a company that gets to get acquired for 500 million, 600 million, $1 billion,
Correct.
rather than trying to go after a $10 billion goal, right?
That makes sense. But unfortunately, I think, like you pointed out earlier in this conversation, there is this tendency to glorify unicorns as if anything below $1 billion valuation is unacceptable from a point of view of defining success. If you had a 500 million exit in about 3-4 years, nothing wrong with that at all. You guys had rock star exit with Messi, 1.5 years or 2 years, I'm not sure. But they were sold for 150 million. So, if I were a VC, I would take it. It's not a bad deal at all. So I think that's the other thing, that opportunistic exits. And the other thing which is fascinating specifically for AI, which I would like your comment on, is, it's something that you said a short while ago, that the landscape is evolving, that even the Perplexities and OpenAIs of the world need to constantly reinvent themselves. But the other aspect is that everyone has been talking about whether AI will take away my jobs. That's something everybody has been talking about, and some people are saying yes, some people are saying no, some people are saying maybe. But the other thing that I have been noticing in some AI ecosystems, is definitely true in the US, in the Valley, is that AI companies are cannibalizing one another. So what that means is, AI is not the stage of asking if will AI take away some jobs is gone already, right? But the more modern question to ask, it seems to be, is even as an AI player, can you be cannibalized by other AI because you're making something more efficient, something cheaper? So how do as an investor see through all the white noise and focus on which ones you want to back?
That's why I'm just happy investing in consumer companies.
Great answer.
I mean, the reality is, listen, if I claimed I knew the answer, it would be incorrect, right? The reality is that no one really knows how it's going to evolve. The potential is so huge for it to take over. Yeah, will it make things more efficient? Will it make things cheaper? Will it take away jobs? Yes, that's going to happen. But is it going to eliminate completely all the jobs? No. There will be things that people will need to do manually, right? But I think it's really, really hard to predict right now. If any VC has the answer, I'd love to talk to them because I don't. And I think we're all guessing in the valley even, I think we're shooting darts.
Understood?
We're shooting darts right now. But it's one of those things, there's also FOMO, right? I don't want to be left out. I have to do AI deals. But there will be survivors. There will be great companies being created. But I think people much smarter than I am. Let them do those things. I'm okay.
Sure. Makes sense. Maybe I'm saying on a lighter note, but only half lighter, is maybe you back consumer companies, but which have adapted to AI and are using AI to introduce sales efficiencies or whatever, right?
I think it's still early. I think in another year, 18 months, we'll see AI driving more efficiency in marketing.
Absolutely.
More efficiency in product development.
Indeed.
More efficiency in sales.
Yeah.
We have to think of them as tools. So consumer companies should think of AI products as tools to make them better, faster, cheaper.
Indeed.
Right?
Absolutely.
Do I need 5 people in marketing for a young company, or can I only need 2 with AI driving the other 3 functions? Think of things like copywriting. I mean, my team, this is all we do. My kids use AI for everything. ChatGPT,
of course.
Right?
Absolutely. So I think you hit that nail right on the head. And frankly, AI-enabled businesses are going to be getting more entrenched, just like IT started, disrupting basic businesses. So I think, funds like yourselves will continue to do that, and which is fair. But you also make this point about, your kids using ChatGPT. It's become very prevalent. It's become like Microsoft Word. Like we started using, Excel, so we don't have to actually do the math in our heads. I think AI will become like that. I think a lot of industries supported by AI are going to do some very disruptive things. This conversation has been so fascinating and interesting that given a choice, I would hold you here for another hour at least. But I know that both of us have meetings to go to. And also, as I jokingly like to say, Gen Z probably doesn't have a patience for any longer a conversation. So, but jokes apart, thank you very much, Ash, for being our guest on the Uncluttered View with Vijay Sambamurthi. This has been a very nice conversation, which I personally enjoyed and learned much from, and I hope our audience did as well. And, it was our pleasure to have you here. And some of the points that you made, I think, should be very, very important lessons and guidance notes, not just for VCs, young VCs and founders, but even, I think, for regulators to take note of some of the important points, governments. So thank you for joining us. Thank you for sharing your journey, your perspectives with us. And I loved having this conversation with you today.
No, thank you. Thank you for having me. I think it's been fun. And I think at the end of the day, one thing we'll remember is the fact that 2 of us are sitting here in India demonstrates what we think of the potential of India, right?
Indeed.
We could be in other places doing business elsewhere.
Absolutely.
But we're here. And so that reinforces the validation of what this country's potential is. And I think we just scratched the surface. More to come.
Absolutely. This is truly India's decade. We have no doubt about that. That's why we're here. Thanks again, Ash, and thank you to all of you for listening in.